we are joined by Subir Malhotra, who is the Executive Director at Capacity Infra Projects, who joins us now. Welcome to the show, Subir. First off, I'll start with the order book itself. You have a standalone order book of roughly 8,800 crores. Help me understand as to what's the breakup for this order and what are the execution timelines looking like.
Well, thank you for having me over once again. And yes, the healthy order book is there for all to see. The order book is generally divided into the government sector and the private sector. The government sector is almost 70% of our order book, whilst the private sector is 30% of the order book. And I can very confidently say that both are showing very healthy and robust, orders coming out in the near future.
So, like you rightly mentioned that, your public sector has roughly 70% and private has 30%. Will this mix change going forward? Are you seeing that shift? And if yes, what direction will it go to?
Well, in the present market scenario, you see, on the private sector, even the real estate cycle is going through a major boom, whilst the government infrastructure, as we are all aware, is going gung-ho about its own pace. So, as a percentage, I really don't see a very major shift happening any which way. Whilst the numbers may keep on going up, but on a percentage, I don't see very major change happening either which way.
All right. And in terms of the order flow that is targeted for FY25, that's roughly 3,000. And this is apart from the project, the BDD project, which is of around 1,000 crores. What are the execution timelines for this particularly?
For the order book to flow in?
Yeah.
Yeah, well, we've already started clocking orders over there. We've got a new order from Raymond's. We are looking at some more. We've already clocked an order which is coming in from some other sources. And as we speak, I can say confidently the pipeline is quite, I would say, choked and ready to flow out any which way.
All right. And
So I really don't see a problem on that 3,000 crore number at all.
all right. And what is the bidding pipeline like right now? And what is the kind of conversion ratio that you usually have?
Well, we normally have approximately a hit rate of 1:6 or 7. And as I can say, we have a bid pipeline which is in excess of almost 15,000-20,000 crores at the moment.
All right. And in terms of geographical expansion, you have been actively bidding in public projects for Bangalore, Hyderabad, and Maharashtra. What is your aim there? What is the kind of geographical expansion that you're planning, and how will this overall, benefit the company?
Well, let me put it this way, that we are more interested on the size and the scale and the type of the job rather than the geography of the job. So if there is a good IT park which comes out in Chennai, we are very ready and more than keen to bid for it. If there is a data center or a hospital happening in the eastern part of the country, we are more than willing to bid for it. So from a perspective of answering your question, we are actively bidding for projects besides our standard geographies of the west and the north and Bangalore. We are bidding for projects in the east. We are bidding for projects down south. Hyderabad is a big market which is coming up, and we look at very major closures happening from these geographies now.
All right. And what about your GIFT City project? Because that has been progressing well, and you expect that to get completed by, I believe, January. What is
Yeah.
the kind of progress there, and what are the kind of revenue inflows you're expecting from that particular project?
Well, GIFT City is one of our marquee clients. We are intending to actually top off the building sometime, maybe early next month, October for sure. And we have around about 4 or 5 months for closure of that. And as we speak, quite a substantial part of the turnover will now start coming in because of the fact that all the finishes and the MEP works are now going to start actually falling into place for this project.
All right. And, you've said that you're projecting a minimum growth rate of 25% in FY25. What are the kind of levers that will, augur this kind of growth?
So I would say FY25 is a given because of the fact that our present order book itself demands that kind of output from us. And rather, it would demand a wee bit more than what we are saying. So I don't see any issue in achieving those numbers, given the fact on how you see Q1 numbers have come out, in which we have come out very strong as far as our performances are concerned. We have come out almost, 30% higher on a quarter-on-quarter basis. And because you see a lot of our jobs are actually quite uh, profitable on the bottom line, any incremental turnover is actually adding huge increments on the bottom line also. Our EBITs and our PATs have gone up very substantially in this quarter.
Right. So, if you expect, your revenues to go up by 25%, where do you expect your margins to be at by the end of FY25, and also your bottom line, if you can quantify that for us?
Well, I would not want to make a future projection for that, but I would say we would very well be in line with what we have been doing at the moment, and maybe a wee bit better than that also.
Right. And in terms of margins, you've said that potential expansion of margin depends on the execution speed. If it improves beyond 550 crores, your margins might improve. So some kind of number there, because your margins currently in Q1 were at roughly 19%. So where will they go if your execution becomes better over a period of time?
Well, I can only say this, that they will definitely improve, undoubtedly. And given the kind of jobs that we are doing and the future jobs that we are bidding for, in which we are going beyond vanilla shell and core works into actually specialized works like hospitals and data centers, I can always, with a lot of confidence, say that the bottom lines are always going to be on an upward trajectory.
All right. And in terms of your gross debt level, FY23, your gross debt level was roughly 370 crore, and Q1 FY25, it was at 336 crore. So any plans for debt reduction overall?
Well, we are at a net debt basis 0.06, which is a very healthy ratio given the kind of industry we are in, and I would say given the industry at large. So, an internal mindset is that we intend to be net, if not net debt, at least, if not gross debt, at least net debt zero very soon.
All right. And in terms of, the anticipation of increased revenue from EPC contracts, what are your expectations there? What are the kind of trends that you're observing there?
In the sense that EPC contracts have become the standard norm of the government. And be it hospitals, airports, low-cost housing, EPC contracts are always the new way in which the government wants to put a lock-in into the final price of the contract. I would say it has worked well in both ways. It has worked well from the client, i.e. the government, and from the sector of the industry also, because there's a lot of value engineering that the industry can get to it, in the kind of technologies that they can get into it, in the kind of equipment that they can get into it, so that the specifications that are demanded by the client are met to the T, as well as improving the quality of the building and the general structure.
All right. And Mr. Malhotra, any kind of fundraising on cards?
Uh, I would say at the moment we are sitting pretty, but we are open to any kind of interesting fundraising which can come our way.
All right. Well, Mr. Malhotra, thank you so much for giving us those insights on Capacate Infra Projects. And thank you so much for taking out time and speaking with us at NDTV Profit.